All right, if you've been in the crypto space for any length of time, you know the deal. You've ridden the highs, you've stomach dropped through the lows. It's just part of the game, right? But what went down on October 10th, 2025, that was something else entirely. This wasn't just another Tuesday dip. No, this was a night that changed everything. So we're going to get right into it. We're going to deconstruct exactly what happened, piece by painful piece. You know, there are moments in financial history that just stop you in your tracks. Well, on that night, the entire world held its breath. Bitcoin, the poster child for this whole new financial era, just went into a complete nosedive. We're talking absolute free fall for a little under 2 hours, and it took everything else down with it. Let's be clear, this was not a market correction. This was something else. This was systemic. It was a cataclysm. So here's how we're going to tackle this. We're going to break this thing down step by step. First up, we're going to relive the 1010 earthquake as it happened. Then we're going to play detective and look for the invisible hands that might have been pulling the strings, and you'll see there's a lot of history there. After that, we'll walk through the wreckage, the consequences, and then we get to the big one. Was this just a freak accident, or was it a full-blown conspiracy? And finally, most importantly, we're going to pull some real, hard-earned lessons from the ashes. Okay, let's go back to that night. Try to picture it. The market's just humming along. People are feeling pretty good, maybe even a little optimistic. And then, bam, a single nasty red candle pops up on the chart. Okay, whatever. But then another one, and another. And then just a waterfall. A plunge so fast, so violent, that even the guys who've been doing this for decades felt that cold knot of panic in their stomachs. But you know what the craziest part was? The silence. There was no news. No FUD from regulators, no exchange hack, no word from the Fed, nothing. Just chaos without a cause. I mean, just look at this timeline. It's not just fast, it's brutally efficient. At 10:17 p.m. GMT, everything's fine. Bitcoin is sitting pretty at over 81 grand. Then the selling starts. And it doesn't just dip below support. It absolutely demolishes the key $61,000 level. You know what happens then, right? A tidal wave of automated liquidations. And right on cue, the exchanges start to buckle. They're lagging, they're freezing up, and then, just like that, in 118 minutes, less than 2 hours, Bitcoin bottoms out at 42,900. Almost half its value, just gone. Poof, vaporized. Okay, but here's where it gets really nuts. The sheer volume. 280,000 Bitcoin. Let that sink in. This wasn't a bunch of scared retail investors panic selling over a few hours. No. This was a surgical strike. The on-chain data is crystal clear. 280,000 BTC were systematically dumped across a bunch of different exchanges. To give you some perspective, that's more Bitcoin than some small countries have in their entire treasury. So yeah, this was no random market fluctuation. This was a planned, deliberate tidal wave. So that really brings us to the million-dollar question, doesn't it? Or in this case, the billion-dollar question. If there was no news, nothing to trigger this, and a volume of selling that big, where on earth did it come from? Are we supposed to believe this was just a freak accident? Or was something else going on? Something planned, meticulously, in the shadows? Well, to really get to the bottom of the 1010 crash, you gotta accept one cold, hard truth about finance. The really big moves, they're almost never an accident. And the good news is we don't have to guess what happened, we just need to look back. Because history is absolutely littered with examples of this exact kind of thing. Sophisticated market manipulation. The game hasn't changed, folks. It's just a new playing field. Let's start with a classic, the London gold pool, back in the 60s. You had eight central banks getting together in a secret pact. Their goal, to artificially hold down the price of gold. And why? To prop up the good old US dollar. I mean, think about that. This was governments, at the highest level, secretly controlling a global market. It's proof positive that powerful groups will absolutely work together to rig the game for their own benefit. Or how about a more famous one, George Soros, taking on the Bank of England in '92. This was one guy with one massive $10 billion bet who literally broke the pound. He forced an entire country to devalue its own currency. It's the perfect example of how one powerful, focused financial attack can bring even a major government institution to its knees. And then there's the 2010 flash crash. Maybe you remember this. The Dow just fell off a cliff, 1,000 points in minutes. The official story was, oh, it was a glitch. But when investigators dug in, they found something else. High-frequency trading algos had weaponized speed. They intentionally yanked all their buy orders, sucked all the liquidity out of the market at the exact moment a big sell order came through. Sound familiar? It's a textbook case of using tech to engineer a crash. And, of course, we have to talk about the one closest to home for all of us, the Luna UST collapse in 2022. Come on, that wasn't a market failure, that was a planned demolition, a brutally sophisticated attack that combined huge short positions with a targeted draining of liquidity pools. It was financial warfare, native to crypto, and it wiped an entire ecosystem off the map. So when you line up all these examples, the 1010 crash starts looking a lot less like a random accident and a whole lot more like a well-worn playbook, just run on a much, much bigger scale. And look, the proof isn't just in some dusty old history books. It's right there, on the blockchain for anyone to see. In the week before the crash, the signs were blinking red. You had these ancient wallets, dormant for 5, 6, 7 years, suddenly waking up. You had over 41,000 Bitcoin move from an OTC desk straight to a hot wallet, basically loading the gun. Then another 17,000 BTC gets chopped up into more than 100 new wallets and sent to exchanges. That's a classic move to mask your size. And to top it all off, you have massive spoofing orders, huge fake sell walls designed to do one thing: create panic. The pieces were being moved into place. The battlefield was being prepared. So, the attack happens. The price crashes. But what's left behind? We have to talk about the wreckage. Because the damage here goes way beyond just a number on a screen. This thing sent a shockwave of broken trust through the entire system. This is about the real human cost of what happened that night. Just think about this. In less than 2 hours, $7.2 billion in leveraged long positions were wiped out. Gone. This chart puts it in perspective. That one night caused more financial destruction than the Luna and FTX disasters combined. Over 860,000 accounts liquidated. You know, it's easy to see these as just numbers, but they're not. Every single one of those was a person, an investor, maybe with their life savings on the line. Dreams just shatter. And here is the absolute coldest, most brutal truth of it all. This wasn't just a loss of wealth. It was a transfer of wealth. A massive one. You had the retail traders, many of them way over-leveraged, who got completely wiped out. You had the miners, who had to dump 73,000 Bitcoin just to keep the lights on. And then, who was on the other side of that trade? The big whales? Well, they'd already been quietly selling off, covering their tracks. And the institutions? They were just sitting there, waiting. And they swept in with perfectly coordinated buys right at the bottom. The panic of the crowd became the payday for the prepared few. It's as simple as that. So an event like this, it forces you to ask a really uncomfortable question, a question a lot of people in crypto just don't want to face. The whole idea of Bitcoin, its very soul is decentralization, right? Power to the people. But the 1010 crash, it just ripped the mask off, and it made everyone wonder, is Bitcoin still this decentralized tool for the masses, or has it just become another playground for the same old financial elite to control? Okay. So this is where it all comes together. We've seen what happened, we've looked at the history, we've seen the devastation. Now it's time to lay it all out on the table and weigh the evidence. We're at a crossroads with two very different explanations for what happened that night. So, on one hand, you have the unbelievable accident theory. Now, for this to be true, you have to believe in a whole lot of miracles. You have to believe that hundreds of ancient wallets all woke up at the same time by coincidence, that exchanges just glitched in a way that perfectly helped the sellers, that institutions just got lucky and happened to have billions ready to deploy at the exact bottom. You have to believe that a dozen different one-in-a-million things all happened at once. Or you have the other side, the coordinated plan theory, the one that says the on-chain breadcrumbs, the historical patterns, the surgical buying at the low. It all connects. It all points to one single logical conclusion. This was an operation. It was planned. So if it was a plan, the next question is obvious. Who did it? And yeah, the people who pull these strings are masters at staying in the shadows. But the chatter, the on-chain forensics, it all points to three main suspects. First up, the big ETF providers. They needed to get their hands on a massive amount of BTC, and they needed it cheap. A manufactured crash would be the perfect way to do it. Suspect number two, a cartel of whales. There's an on-chain group analysts called the Omega Ring, and their wallets were moving in perfect sync right around the crash. And finally, suspect number three, and this is the really chilling one, nation-states. In a world of shaky geopolitics, accumulating Bitcoin becomes a strategic move, a financial weapon. What better way to do it than to shake everyone else out of the market first? Okay, we've walked through the whole ugly mess. The crash, the clues,
the consequences. But just understanding what happened isn't enough. The most important part is what we do now, what we learn from it. Because if we want to survive and even thrive in what is clearly a predator's market, we have to internalize these lessons. These are the truths that were paid for in blood, sweat, and liquefied tears.
So here they are, 6 painful but absolutely essential lessons. Number 1, nothing is too big to fail or too big to be manipulated. Forget too big to fail. Number 2, leverage is a weapon, and you need to remember it's a double-edged sword, and the sharpest edge is always pointed right back at your own throat. 3, the sharks in this water are not your friends. They don't want you to win. They want your liquidity. They feed on your FOMO and your fear. 4, this market rewards preparation, not passion. Cold, hard planning beats emotional reaction every single time. 5, every big crash has a purpose, and 9 times out of 10, that purpose is to transfer wealth from one group to another. And finally, number 6, you cannot fight a tidal wave. Your job isn't to fight it, it's to learn how to see it coming.
Look, the 10-10 crash wasn't just another bad day for Bitcoin. It was the day the market showed its true, raw nature. It was a violent transfer of power. It was a gut check for everyone involved, and it shattered a lot of illusions. In the end, it just hammered home a truth that's as old as markets themselves. The strong always win, the prepared always survive, and the dreamers, the ones running on pure hope and emotion, they're the ones who get swept away. So the real question this whole thing leaves us with isn't if something like this will happen again, it's when. And when it does, which one of those 3 people are you going to be?